In the last couple of points I've discussed, I have repeated at least 7-8 times the need for expert advice. In fact, ad nauseum, I've spoken about it. I'm not apologetic about it because it is important. When you have a health issue, you don't read the internet and go and buy a medicine. You consult a doctor, but you keep yourself informed by reading the internet. The same applies here. It is a specialized field. So as an investor, what should you focus on and what should you avoid not focusing on? You should certainly focus on identifying a compatible investment advisor. And we'll talk a little more about what this compatibility means. 2, you should make sure your risk profile is assessed from time to time so that both you and the advisor knows where you stand vis-a-vis risk with regard to your investment. 3, it's important that you jointly work with the investment advisor to create the asset allocation that we spoke about earlier and then invest based on that asset allocation. You get involved in executing rebalancing, which means based on the advice from time to time, it could be monthly, it could be quarterly, once in 6 months. There'll be rebalancing required of your portfolio, which the investment advisor would justify, and you should be involved in executing this. Very important that you use all technology and apps that are available today to create a dashboard which tells the net worth of you at any point in time. And there are many technologies and apps available, but it's absolutely imperative that at any point in time, just like you would know the sales figure in your job if you are a sales manager, you should know what is the net worth of you, both investments and liabilities netted off. What is the value of debt? What is the value of investment? How are they split? What is the asset allocation ratio? What is each asset class giving you in terms of return? These are all things like XIRR, IRR, and all of those are very important measures which will tell you how your asset is progressing year on year, and it's important to have that dashboard. And I cannot overemphasize the need for such a dashboard. And lastly, I would say you must focus on understanding the macroeconomic situation, the impact of various macro factors on your investment, interest rates which move and which is dictated by the central bank, forex movements, how does your currency fare vis-a-vis the dollar, which is sort of the standard currency against which you compare. What are the tax laws in the geography that you are investing in? How does it impact you, and what are the changes that are announced from time to time, and so on. These are some of the things which I would strongly urge you to focus on, and this itself is more than a handful. You will spend a lot of time on this. What not to focus on? I would say certainly there are a few things. You want to do stock picking and it is your interest, keep a small amount of money and do it as your pastime or even as an avocation, as a serious hobby. But don't let that come into your investing process. Second, I would say no knee-jerk reaction to market information. I know personally it has happened to me that when somebody told me that there's going to be a huge problem with the economy, I remember calling my investment advisor and saying, move everything to cash tomorrow. And he laughed at me and said, I have been safeguarding your investment for the last 10 years and you should give me the right to give you some advice. Please hold on. And I couldn't have thanked him enough, because in the next 1 month, had I moved everything to cash, I would have lost at least upward movement of at least 4% in my overall invested wealth, which is a huge amount. So knee-jerk reaction to information is not at all a good idea. Changing strategies often, saying suddenly that, oh, there is crypto, so I want to change my asset class and get into crypto and not I will liquidate real estate or I liquidate gold and so on. This kind of sudden changes in strategies does not do any good at all. And lastly, I would say trying to invest based on water cooler information that says, oh, you can double your wealth tomorrow. Buy this stock, it will go up 3x, 4x, 5x. Sure, it happens by accident. It's a probability. But to use that as a strategic information and act on it is not a good way to manage your wealth. It's not a good way to manage your investment. You may experiment with it with some amount of money which you're willing to lose, but it's not a good idea to make that as the principal way of managing your investment. So essentially what is listed here are the areas which should focus on and the areas which I would say you would always be tempted to do, but you need to keep away from.
Thank you for watching. If you want to dive deeper into this topic and stay updated on our latest content, be sure to subscribe now. And if you found this video helpful, don't hesitate to share it with someone you know. Let's spread the knowledge and the fun together.